When you look at global life insurance trends, something surprising jumps out. South Korea buys more life insurance than almost any country on Earth, including the United States. In fact, South Korea consistently ranks among the world's top insurance consumers per capita, while the US, despite having the largest insurance market overall, falls far behind when you look at how many people buy policies and how deeply they rely on them. So today, we're re-exploring one of the most fascinating financial contrasts in the world. Why do Koreans buy more life insurance than Americans? The answer isn't simple. It's a powerful mix of culture, history, government policies, economic pressure, and a unique mindset around family responsibility. To understand South Korea's relationship with life insurance, you have to start with the idea of family. Korean culture places a huge emphasis on responsibility to parents, children, and even extended family. There is a strong expectation to protect your loved ones financially, and this sense of duty drives people to prepare for the future far more aggressively. If something happens to a breadwinner, the family suffers. There isn't a wide safety net to fall back on, so life insurance becomes more than a financial product. It becomes a symbol of responsibility. It's a promise. It's a guarantee that your family will never be left behind. This emotional foundation is one of the strongest reasons South Korea buys so much insurance. America, on the other hand, has a very different cultural approach. Individualism is at the heart of American financial behavior. People are encouraged to take responsibility for their own lives, but not in the same family-centered way. Americans don't typically feel responsible for their extended family the way Koreans do. Children aren't expected to financially support parents in old age, and parents aren't expected to provide lifelong financial cushions for adult children. This reduces the emotional pressure to buy life insurance. While many Americans do buy policies, it's often tied to major milestones like buying a home or starting a family, not cultural expectations passed down for generations. But culture alone doesn't explain this huge divide. South Korea went through rapid economic change in just a few decades. From the 1960s to today, the country grew at a speed the world had never seen before, transforming from a low-income nation to an advanced economy. But rapid development came with instability. Families lived through poverty, war trauma, and economic shocks like the 1997 Asian financial crisis. These events shaped an entire generation to always prepare for the unexpected. Insurance became the tool that offered stability when everything else felt uncertain. Even today, older Koreans remember what it was like to live without protection, so they buy policies not out of fear, but out of habit, discipline, and caution. Meanwhile, America has been a stable, wealthy country for much longer. Economic growth happened more gradually. Safety nets developed over time. People didn't experience the same level of sudden financial vulnerability. As a result, Americans don't see insurance as a survival tool. They see it as optional protection, something smart to have, but not mandatory. This mindset leads to lower adoption, slower market growth, and more skepticism around insurance products. Now let's look at healthcare, one of the biggest factors separating the two countries. South Korea has universal healthcare, but it doesn't cover everything. Many medical procedures, treatments, and private hospital services are expensive. So Koreans buy additional health and accident insurance to protect themselves from unpredictable medical costs. Even younger Koreans often buy multiple policies to fill every gap. In the US, healthcare is privatized and expensive, but employer-sponsored health insurance is extremely common. Because many Americans get coverage through their jobs, they don't seek multiple private policies the way Koreans do. And since medical bills can be overwhelming, Americans spend more energy navigating health insurance than life insurance. Another reason South Korea buys more insurance is the structure of the products themselves. Korean insurance companies created innovative and aggressively marketed policies, savings plans, hybrid investment insurance products, and long-term paid-up plans. These products became a part of everyday financial planning. Insurance wasn't just something you bought for your family's future. It became a savings tool, an investment alternative, and even a retirement vehicle. In the US, insurance products exist in all forms, but Americans tend to separate their finances. Investment accounts for wealth, pensions or 401ks for retirement, and insurance for protection. Koreans, however, blend these together using insurance-based products more than almost any country in the world. Marketing plays a huge role too. In South Korea, insurance agents are everywhere, in malls, banks, offices, and online. It's extremely common to meet someone whose full-time job is selling insurance. The industry is respected, competitive, and well-paid. Agents invest heavily in relationship building, often meeting families repeatedly and providing ongoing financial guidance. In the US, insurance agents exist, but the industry has a mixed reputation and far lower consumer trust. Many Americans view insurance agents with skepticism, fearing aggressive sales tactics or hidden fees, which reduces adoption. Now let's talk about government support systems. In South Korea, pensions are modest and not enough to fully support retirees. People know they need additional financial tools to survive retirement. Life insurance becomes part of that solution, especially policies that build cash value. In the US, Social Security is widely expected. And though it has issues, it still provides a stronger baseline for retirement than Korea's system. When people believe the government will support them later in life, they buy fewer private products. Another important factor is population trends. South Korea has one of the lowest birth rates in the world. Fewer children being born, people worry about who will care for them in old age. Younger Koreans don't expect to rely on their children. This has led to explosive growth in insurance products that provide long-term financial independence. America has low birth rates too, but not as extreme, and the culture doesn't expect adult children to act as financial caretakers anyway. So insurance doesn't fill the same emotional gap. Psychology plays a huge part in all of this. Koreans tend to be more risk-averse economically. They save more, borrow less, and focus heavily on financial stability. Americans, influenced by a consumer-driven economy, are more comfortable with debt, investing, and taking financial risks. Americans might prefer to put money in stocks or real estate instead of long-term insurance plans. Koreans prefer stability, predictability, and guaranteed returns, which insurance offers. So why do Koreans buy more insurance than Americans? It's not because one country is smarter or more financially educated. It's because they experience risk differently. Koreans see risk as something that must be eliminated. Americans see risk as something that can be managed or even embraced. Koreans rely on insurance for stability, savings, and family protection. Americans rely on individual wealth-building tools, government programs, and employer benefits. Koreans prepare for emergencies early. Americans react when life demands it. And here's the most interesting part. Both countries are starting to change. Young Koreans are becoming more like Americans, skeptical of traditional insurance, exploring investing, and rejecting products they see as outdated. And young Americans are becoming more like Koreans, increasingly anxious about healthcare costs, retirement uncertainty, and financial instability. The two countries might be moving toward the middle of this spectrum without even realizing it. In the end, the story of Korea and America isn't about who buys more insurance. It's about how culture, government, history, and psychology shape our approach to financial risk. The products we buy are not just financial tools. They're reflections of what we fear, what we hope for, and what we expect from life. And understanding these differences helps us understand how the world thinks about money and how it prepares for the future.